Hello everybody, we're here today at the Kaplan Business School. I'm joined by Michael Steed, who is the AAT tax guru and accounting technician columnist. Michael, welcome to you. We're now going to ask Michael to turn from poacher to gamekeeper and look at the world of tax from government's eyes up until the end of this Parliament to 2015. Michael, what do you see as the biggest threats to the government's revenue in the next 2 years or so?
The threats, Ben, as perceived by the Treasury and HMRC, are at a corporate level and at a personal level as well. There's been a lot of press comment about Starbucks paying virtually no tax, about Amazon paying virtually no tax. And of course, people get very irate about that, especially the man on the street, you know, Joe Public, saying, why is it that I'm suffering here and these guys are paying absolutely no tax? There is an angle there. If I could just put my poacher's hat back on for a second before I put my gamekeeper's hat back on, that there's this use of inflammatory language in there, because what people will refer to as loopholes and the government will refer to plugging loopholes from the other side is simply managing your tax affairs within the rules that are not written by you, that are given by the government. So there is that problem. As far as the government's concerned, it's at the corporate level. I'll talk about the personal level in just a second, but it's the Starbucks issue. It's about diverting tax out of the UK. And in a sense, it's an own goal, because where you get tax jurisdictions where you have low tax rates, people want to come to you. And of course, what the government's trying to do is to walk this tightrope between having high tax rates to get a high tax take into the Treasury, but at the risk of frightening people off. And at the other end, if you have it too low, they're worried that people won't pay enough tax and therefore they won't get enough money into the Treasury, which will exacerbate the borrowing problem. But actually history tends to show that when you bring tax rates down to a reasonable level, people don't plan for them anymore. They sort of accept that it's part of the fabric, the warp and weft of doing business, and they're prepared to pay some. We'll come on to that perhaps in a second when we talk about personal tax rates, but an average tax rate around the world in corporate terms it is around about sort of 28, 29%. It's a bit different in America because they got two layers of it, federal and state tax. But if you look at those sorts of levels, the UK with its new proposed rates of 24%, that's not too bad, and the world rate is actually slightly dropping. So what George Osborne's trying to do within the life of this Parliament is to get that tightrope, to walk on it such that he preserves the tax take into the Treasury and not frighten people off. Yep. So that's what he's trying to do. In terms of the threats, it's people diverting, because people traditionally see the UK as a high tax environment. So Starbucks, for example, some of their profits get diverted out of the UK's taxman's grip because of the renting of the intellectual property from Seattle.
Yes.
So you've got that sort of thing. But most people would say, well, that's legitimate. And if you had a very low tax rate here in the UK, you'd solve the problem. So from a corporate level, the biggest threat is people deploying those schemes. Of course, if you look at Martin Sorrell's WPP, there's another good example there, that he went away frightened off by the corporation tax rate in the UK, which was then about 28%, over to the Republic of Ireland, where it's 12.5%. Now, he's being tempted back because it would be a great coup for George to get him back, and I think that's going to happen. But that remains part of the fabric, that, how do you resolve that? A very high tax environment. He is dropping it. He's taking it back in very cunningly in other ways, like dropping capital allowances. But he is trying to get that mainstream thing, because if you're in from the outside looking at somewhere like the UK, you only ask two questions. What is your corporate tax rate, and what is your highest personal tax rate? They're the questions that inward investors come. So the threat is that he won't get enough inward investors. That's one of the threat. Yep. And he's only going to solve that problem by having tax rates that are low enough to attract people in from the outside. So we've got the Starbucks, the Amazons, who are basically finding reasons to take profits out of the UK. And there are the people not coming in because we're perceived as too high tax.
And how does it work then for personal taxes?
Well, it's effectively the same argument, Ben, that, if you've got people outside, they won't come into the UK if the personal top rate of tax is too high. So you need to get that down. And of course, one of the big furores out of the 2012 budget was the proposal in 2013 to actually bring the top rate of tax down from 50 pence in the pound to 45 pence in the pound. And of course, the man on the street just immediately says, well, that's just a gift to millionaires, isn't it? And the Labour shadow cabinet have made great play on that one, have they not? Yeah. But actually, you've got to separate it out, because it's the highest 5% of earners are those people who pay most into the Treasury. And if you frighten them off, well, they're just going to go to Geneva or Frankfurt or the USA. So you've got a structural problem there that we want to try and keep them on board. And the other point on that personal tax is that there's this thing called the Laffer curve, where there's a kind of an optimum rate of tax. And it's generally reckoned that the optimum rate of tax is between 40 and 45%. This is the top personal rate of tax, such that people are prepared to pay it without doing a runner saying, I'm not paying that at any price. So all up then, Ben, it's a very difficult tightrope for the Chancellor to walk. There are arguments on either side.
Michael, thank you very much indeed.
Right.